Hello traders, welcome to your daily market update for Tuesday the 12th of May 2015. And last night was really a quiet trading session, all but the pound was soaring to 4-month highs on the back of investors still expressing the relief that the Tories are remaining in government. So we do have continuity, which is always good for a currency pair as it does reduce risk. And people are still willing to buy that up, and it's broken through a major resistance level. So there was also even discussions starting to float around about the policy tightening in the UK, and I think that's a little ahead of schedule or expectations, but nonetheless, it did help push the pound above the major resistance level, and it has completed the cup and handle pattern, which I described yesterday, and I'll point out again today, which does lead us to believe that there are further gains potentially up for the pound. However, the market will now move away from politics and move back towards economics, as we do have the quarterly inflation report coming out, and that will be a key data release this week for the pound. And it should definitely set the tone for the rest of the week as the pound is trading at very high levels after a very strong rally. So if we do get a neutral outlook for the pound, those recent gains could be quickly erased. However, should the BOE be optimistic, then we expect the pound to continue to charge higher. But this scenario will make it hard for us to identify solid trading opportunities, as we already have had a very large move higher. And you may want to look at other pound crosses, such as the Great British Pound versus the Australian Dollar, Great British Pound versus the CAD, the Great British Pound versus the Yen. Things of that nature, you might find a better opportunity than the Great British Pound versus the US dollar due to the large gains that we've already seen in such a short period of time. We also have the New Zealand dollar this week has been hit hard, and probably the hardest, after a poor retail credit report on the weekend, and then also rumours from the ANZ Bank that the RBNZ could cut a further 25 basis points in June and in July, which is really haunting the pair right now, pushing it lower. So there's no surprise to see that these rumours are starting to impact the market as dairy price options continue to remain weak month after month. And we are seeing economic data failing to surprise, except for the housing data, which you can see today has improved, and it is offering a slight boost for the pair. So we are seeing a boost in housing, but nonetheless, the rest of the economy struggles. A similar situation in Australia. So the pairs are really under pressure. Now, we do have the Euro deadline tonight for the Greece to make their $750 million debt repayment to the IMF. And that's on the back of yesterday, where we did have a Eurogroup meeting, and it's no surprise to everybody that no deal was struck, and it was pretty much a waste of time. So we are now focusing on this debt repayment, and we could see the payment being made as Athens officials have already taken steps, or said that they have been taking steps to make the payment to the IMF. And if this is true, we could see a relief rally in the euro as Greece abates a further month of potentially being defaulting on their debt. So that's that relief rally will be just purely on a risk basis. But nonetheless, the market could then potentially look to the weeks ahead, and noting that next month Greece has already stated that they, after this payment, they're all out of money, which means that they're not solvent anymore. And when Greece isn't solvent, then they are no longer eligible for help and assistance from the ECB and the IMF in terms of the LPAs and other products of that nature that they've been living off. So that could really turn negative, and negative flows for the euro could cap any rallies that we do see and haunt the pair in coming weeks as it becomes closer and closer to Greece, and the situation becomes far more serious than the games that have been going on in recent months. So we'll have to keep an eye out for that. So they're the three key stories that the market is focused on, but nonetheless, we do have data coming out today. We have some industrial production information coming out for the pound, and that will affect the pair in the short term ahead of tomorrow's quarterly inflation report numbers that the market is focused on. We also have the budget release in Australia. That could impact the Australian dollar, and it's one that will go on for a few hours on where the government will be delivering the budget, and it provides a good forecast for the Australian economy. And all expectations locally is that the budget will paint a pretty grim picture of Australia with a lot of cuts in spending, as we need to try and keep some powder dry for the economy as it isn't improving. We also have later on in the session a little bit of US data. We have the job numbers. We have Fed Williams' speech, which the market will be looking at, and his comments in terms of an interest rate rise could offer support for the US dollar. And then we have the monthly budget statement, which also could offer support if it is tick up a little bit. But then the key market data coming out really late in the session or early in Wednesday, depending on where you are situated, would be the RBNZ governor's speech here. Now, this speech will definitely be focused on from the market as if he was to provide a very dovish outlook, well then the New Zealand dollar could tumble quite quickly. So that's one to keep an eye on. So that's the key data coming out for the next 24 hours, and I'd be keeping a keen interest eye on the New Zealand data. The Australian budget will also be in focus, and then in the short term, the Great British Pound data as well. So we have a little bit going on there. If we have a look at the dollar index, it's still trading within the range. As I've mentioned in the past, the range hasn't changed. It's 96 and 94 is offering support. And right now we are just grinding higher, and I think that we're going to remain in this range. There isn't a lot of US data out this week, so other aspects of the market that I've just been mentioning will take centre stage. If we have a look here at the charts on the New Zealand dollar daily chart, you can see as soon as we've broken out of this wedge, we've just continued to slide, and any bounces that we do see may be opportunity to sell off. And I'd expect that any bounce would probably stall at the 74-cent range. And if Governor Wheeler's speech is negative, I think that the price action will break 73 cents. So we'll have to keep an eye on it, and we'll be looking for any trading opportunities in the New Zealand currency pairs, as they are by far the weakest pair at the moment. Now, the Australian dollar has been consolidating after the recent breaks above 80 cents and failing to go above, and we are consolidating around the 79-cent range, and it's going to take something quite large for it to break out of this range. And for now, I'm not sure that the budget has enough clout to offer that, and we could remain within the range for the Aussie dollar, just for the first part of this week at least. The Great British Pound soars above this major resistance level of $1.55 300 as we have got the completion of the cup and the handle pattern breaking above the rim of the cup, and that suggests that further prices want to go higher. But as I've said, the inflation report will be the deciding factor on that, or whether this is a false breakout and the cup and handle pattern has been completed, but then it may stall and run out of momentum. However, if we do start to see some bullish input, I'm sure that the pound will continue to rally and opportunities in other pairs. Now, the euro has pulled back its gains recently, but we are still trading in a range-bound market. And as I've mentioned, if we do get a payment from the Eurozone, we could get a rally, but I don't expect it to break any major resistance levels. The rally could just move up into the upper region of this range-bound market, where the major support was previously on the triple top, and then we do have major resistance here at $1.14.5. So I think the market's going to remain within this region, and we'll wait and see how it plays out with the payment before we get too excited on other trading opportunities. The US dollar versus the Canadian dollar has been quite flat due to the US dollar being subdued this week. I think that oil prices will dictate where this will move, and for now oil prices have also been quite flat, so it's not surprising to see that the US dollar versus the CAD is consolidated, and the weekly tweezer bottom pair is still holding up, but we'll see how the week progresses. The US dollar versus the Japanese yen still within the range bound, slightly grinding a little bit higher in the upper end of the channel, but there is no data, and I do expect that this range will remain intact for this week at least, as there isn't anything really to push it outside of that. Well, that's it for today. Keep an eye out for the major developments on the euro today, and then later in the session we will have the New Zealand Governor Wheeler's speech. That will be the two key major themes in the market. And I wish you all the best in this trading day. And until tomorrow, trade well.